Very good morning. You're watching India Market Open and we're set for a very newsy and interesting session. So much going on, Niraj, and so much news to unpack, whether it's what's happening to holding companies, whether it's what's happening with farm loan waivers, Punjab farmers now demanding it, or even whether what's happening with telecom spectrum auction. So a lot of news probably going to determine what you see in the markets today.
Yeah, and the small unfortunate part that Brent is higher. So from that perspective for India, maybe a bit of a tizzy, but it was a day of smart recovery yesterday, Tamanna, and it'll be interesting to see if we kind of build on upon that.
Yeah, absolutely. Just one story that I want to quickly talk about before we get to the day, and I found that very exciting, Niraj, is Julian Assange walking out after 5 years plea bargain in the US. Remember, this is the WikiLeaks guy who really revealed state secrets of the US, and a huge figure there, and that plea bargains finally happened. He's walked out of a prison cell after 5 years in the UK and will most likely be heading back to Australia. So I thought that was an exciting story for freedom of information out there. But of course, all the information right here on India Market Open, and let's get you through the global cues. Yes, you're right. Brent is up. I don't know how much of a worry it is for a market which was sitting pretty even at 95 levels, so at 85 maybe. But yes, the trend is upwards, no doubt. But let's bring you the global cues. Interesting trade overnight in the US, mixed trade actually. While the Dow was up about 260 points and Nasdaq slid over 1%, and all thanks to Nvidia. Clear rotation out of semiconductor and tech stocks. In fact, tech stocks fell the most on Wall Street overnight. That entire sector was down while oil and gas was up. Nvidia down 7% in trade just yesterday. In the last 3 sessions, lost about 13%. But the long-term picture has not really changed. More perhaps profit booking or looking at other sectors right now. But that's going to be in focus over the next few sessions as well. What is the street looking at in US markets, at least, is PCE data, which comes out on Friday. That's a personal consumption expenditure data, so that's an inflation gauge, which is important. Ahead of that, nothing much happened in terms of bond yields as well. Pretty much flat, the 10-year Treasury at 4.26%. Remember, we've now had quite a while of easy bond yields, which is good in terms of an Indian market or an emerging market perspective. So that's one thing to remember. Brent, a bit of a worry on 2 factors. Geopolitical tensions rising, this time between Israel and Lebanon. Both sides have been trading threats over the last couple of days. Supply expected to be a bit constrained in the US as well. And you've seen both Brent and WTI prices up about 5.5–6% just in the last week. So that's some of the factors to look out for. Asia, though, has opened up positive. Let's see if it still remains so. Yes, all in the green, despite all the tizzy in the tech stocks in the US. Asia has opened up in the green, and we should pull up the implied open to see what we are set up for this morning, which is a tick of green after the last couple of sessions. Welcome side, 33 points up is what we're expected to open. Now, this at a time when fund flows have generally remained quite stifled, I must say, and even yesterday, you saw that in trade, 820 crores sell from DIIs, buy of 654 crores from sell from FIIs as well. So fund flows have overall remained muted, nothing too exciting happening over there. And I suppose that's going to continue for a bit before you have the next big trigger, some consolidation.
Yeah, very likely. Actually, just one small global piece in addition to everything that Tamanna you stated. I thought this whole happening in coordination action against all the Chinese businesses, if you will. So US is probing China Telecom and China Mobile over internet risks, three data spaces of 3 Chinese telecom companies. So that is one interesting piece. Canada has announced plans to curb imports of Chinese-made EVs. And remember, this is happening at a point of time when the EU and China are having a dialogue just before the EU is slated to slap some fines on Chinese EV imports as well. So lots happening on that front, which was interesting. But yes, is it periods of consolidation? This is the point I'm trying to make on the China piece. But
Canada, just to add to that, Canada also saying, will not be importing
Chinese EVs. Yeah. So US, Canada, and EU, all three right out there. But bringing back focus to India and the trade setup for the day today. Yesterday, as we said, a day of recovery, really. If you look at what happened intraday, we were at the lowest point in the first 1 hour and then marked a significant recovery for our markets during the course of the day, which was a great sign. And very strong put writing was observed at this 23,400 and 23,500 strikes. Now, because that concentration is there in fresh OI addition yesterday, you would suspect that those would be the immediate points of support that the market might have. If not 23,500, then certainly 23,400, but I would reckon 23,500 too acts as a key point of support out there. So that is one thing to monitor. And on the banks as well, there was both call and put writing at 51,700. So the banks were flattish, but they mirrored the Nifty per se. In fact, banks, the intraday recovery in banks pulled the Nifty higher. And I would suspect that 51,700 and the activity around this strike today might well give the clues around what happens to the banks. And if banks were to do well, there's no incremental, very big negative news on some of the other heavyweight sectors. So very likely that the bank Nifty performance will determine what the Nifty does today. So for an intraday trader, I think a focus on the bank Nifty will probably play richer dividends if you are indeed trading the index. The only one pocket, I think, that almost is a consensus avoid is this whole set of stocks around the MFI space. Now, Tamanna pointed how Punjab is now asking for waivers and other states will follow suit. People, even if the government doesn't give waivers, let's assume, the market will now want to believe that there might be upcoming waivers in other states where there might be elections, so on and so forth. So that, coupled with the fact that there are delinquencies that are starting to shape up. Yesterday, there were a couple of notes floating around how there are delinquencies now being seen in select states as well. So that plus the threat of waivers might keep anything related to the MFI bucket under a lot of stress. So that's one space that almost everybody is saying that we just want to avoid right now. There might be value, we'll hunt for value later. For now, don't want to go down the path wherein there might be negative surprises that come up and you're left holding the bag, because remember, almost all sectors except for one or two are trading at expensive valuations. It's just interesting that I was talking to Axis AMC yesterday, and they were making a point that it's almost virtually impossible to find value, because maybe HDFC Bank, for example, had value at 1450. At 1670, it is a 3 times price to book. So it's not at historical lows. So yes, it's not at 4 times price to book, so therefore there is great. But it's no longer at this 2.2, 2.3, 2.4 as well. So value is almost absent in the market. You don't want to hold the bag. So that bucket, Tamanna, spoke to 3 or 4 key people yesterday. Everybody's saying that's one bucket that you rather avoid.
The reason for it also is, Niraj, and if you go to see, even if there are waivers, if a state government comes and announces farm loan waivers, it's not as if no one pays the bank. The taxpayer pays the bank because the treasury, the state government pays the bank. But what happens is, and what's typically seen in the last round of farm loan waivers is then that set of borrowers just stop paying interest rates or EMIs on everything, whether it's appliances or even non-farm loans. Plus, you have future delinquencies sort of come in, because for those who have paid their installments, they feel like they've been gypped. Why did we pay if it was going to get waived off? So that's a tricky terrain, and with 2 big elections coming in, Haryana and Maharashtra, both very agri-dominant, both where the BJP needs to do well in the state elections, it's going to be tricky. So yes, absolutely. MFI is one block to look at. I would say the other one would be telcos, because spectrum auctions come in today, and we had a detailed report on this on the website as well, and we covered it yesterday as well. So Airwaves worth 96,317 crores on the block. It's a muted demand as per an antique stockbroking note because of the earnest money that the top 3 players have put in. Unsurprisingly, Jio has put in the most, followed by Bharti Airtel and then Vi. So all three will be in focus. Vodafone Idea more than anything else, because now they have some money and they might try to recover some circles that they have lost in the past. So I would look out for these stocks as well. And there's a more detailed City note on telcos overall as well, noting down all of the issues that the sector is facing. They are quite positive on Vodafone Idea, saying that the worst may be over. In terms of, at least the rock bottom has been hit, and from here it could be a climb up. So Vodafone Idea, I would watch. In the last 1 month, already about 14% up, 30% up in the last 3 months. So that's one stock as well. The other ones, specific ones, Amara Raja was one that I put on my list because a fairly significant agreement that this company has signed on. Remember, Amara Raja post the elections was on a different trajectory altogether, and for entirely different reasons, for that TDP connection, etc. But this is a solid, news piece. They have signed an agreement with GIB Energy in Slovakia. It's called Energy X, actually. It will be licensing a certain technology. It's called a Goshen LFP technology for lithium ion cells, which will enable Amara Raja to manufacture these LFP cells. So this could be a big one. It's in line with the company's efforts. So that will be investing 9,500 crore rupees to set up a giga corridor in the state of Telangana, and its integration as well with Goshen's global supply chain network. So I think you could see some action on Amara Raja today, apart from everything else you're seeing in auto anks.
Exactly where I just thought this Kotak note was interesting, Tamanna, on Amara Raja, because you are right, it will most probably open gap up. And a lot of people actually say that it's trading at a discount to Exide. So therefore, let's see if there is some upside here. The Kotak note says that exactly what you said, that we believe the TLA with Goshen will help the company develop lithium-ion batteries and scale up its business, which we had already baked into our assumptions. But the interesting piece is this. They say that valuations, one, that they are remain expensive amid the terminal risk to the lab business and the inferior return ratios of the lithium-ion business, given the high capex requirement as well as the commoditized and B2B nature of the business. It's very interesting that they are pointing out one which could largely seem obvious, but the market for now will look at the growth opportunity maybe and the scale up that can happen in lithium-ion batteries, because they are not manufactured in India thus far by anybody. So if indeed Exide and Amara Raja managed to do that, a bit of a head start. So interesting conflict of sorts out there for an Amara Raja shareholder.
But you know what Exide has over Amara Raja, and the reason why it was so exciting is because of their tie-up with the Hyundai Kia network. Now Amara Raja will have access to the batteries, but do they have that big, large OEM on the other side? Will have to be seen as well. So, okay, Amara Raja one. The other one was Crystal Integrated Services because of this Nuvama note. What was interesting to me was the upside in the target price that Nuvama has set. It's initiated a buy with a target price of 1369 and upside of nearly 70%. It's a leading integrated facilities management service company specializing in healthcare education, one-stop solution provider, and 77.6% revenue comes from the government. So they expect also a very healthy EBITDA margin expansion to about 7.7%. That's up by about 1%, 97 bips. So that's one I'd want to watch out for. And another important one, and in fact we'll have a more detailed report in just a bit on it, is on Bandhan Bank. Now, this is crucial. So late last evening, in fact, the Reserve Bank of India has appointed an additional director on the board of Bandhan Bank. That's Arun Kumar Singh. He's a former CGM of the RBI that has been appointed to the Bandhan board. Now, why is this a big deal? Because it comes at a time when the bank is hunting for Chandrasekhar Ghosh's successor. And remember, Ghosh is Bandhan and Bandhan is Ghosh is the way this bank has been looked at since its inception. So that successor is being looked at. Typically, the RBI also steps in when it feels the need to steady the operation. So this could be looked at as a bit of a sentimental negative for Bandhan Bank this morning.
Yeah, well, so a couple of interesting stocks from Tamanna's end. Here's a couple that 2 or 3 that I think might also stand out in the session today. So there are 2 or 3 blocks / QIPs that you may want to focus on. So first is All Cargo Gati. A QIP has been launched. The indicative total issue is of the up to 200 crores, and the indicative price is at 101 rupees per share, which is a discount of about 10.17%. So because it's a very large block, and this was on the anvil, by the way, and the stock had run up yesterday, that's very curiously. So suspect that the stock will start off lower today. So watch out for all cargo Gati in the session today. That's the first stock that, at least on my list. Happiest Minds. Interesting time for an IT company promoter to come out and sell such a large stake. It's about 6% stake that promoter and founder Ashok Soota is going to sell today. The floor price is at 826 rupees, which is about a 10% discount to the current market price. Watch out for Happiest Minds, will likely react negative today. And Borosil is the other one. QIP has been open. They released this on the BSE yesterday to raise up to 150 crore rupees. A discount of about 4%, not too much. Maybe the QIP gets absorbed well, so that's something to note as well. So these are the first three on my list. All three have a block or a fundraise activity today, and a couple of them at least could start off with a fairly hefty cut to themselves. Let's see how they get absorbed later on.
Let me add to that fundraise list. I don't know if you talked about AU Small Finance Bank, RBL, Saturn Credit Care. Everyone wants to come into this market, and it's a fundraise frenzy, so to speak. And of course, Borosil you talked about. So all of these are coming in with fundraise, which is great. Like, you know, to quote Uday Kotak, you need supply and demand to be matched up, and we need more supply of paper as well. The other one I thought we should quickly talk about is Zomato. Everyone's very excited about Zomato this morning, and essentially it's because Prosus had its annual report, and Prosus has a large stake in Swiggy. Now this is why the street is looking at Zomato today. So in this annual report, Prosus talked about Swiggy's growth, which is looking very positive, in line with what Zomato is saying, and that's sort of a proxy, right, for a space which has two large players, which is what's making a Goldman Sachs, a CLSA, and MK, everyone very excited about Zomato. So Goldman Sachs, for example, has maintained a buy with a target price of 240 bucks. That's a 21% upside, saying that Prosus's Swiggy disclosure suggests further share gains for Zomato. The scale of Zomato is 30% larger than that of Swiggy. That's the GOC scale. The market share of Zomato is now at 56 to 57%, which is an expansion of nearly 2% over the previous period. And the quick commerce scale is 50% larger than the nearest competitor, which is they're talking about Blinkit here. Zomato, being ahead of its peers on profitability, will continue to provide opportunity. CLSA has maintained a buy with a target price of 248. That's a 28% upside, looking at the fact that Zomato is growing faster than Swiggy. So essentially, the Swiggy IPO, of course, now a big milestone because that's coming up as well. But the fact that through Prosus's disclosures, you're getting a picture of Swiggy is giving the market a sense of a further upside for Zomato, which I find just fascinating because literally they're just two players in the market and an audience or a customer base with an increasing appetite for quick deliveries.
Yeah, and you're right. I mean, Zomato could well turn out to be the stock of the day, to be honest, by virtue of what the numbers have come out. So keep an eye out for Zomato as well in the session today. And lastly, Bernstein has a note on HDFC Bank, an outperform rating with a target price of 2100. A lot of you might scoff who owns an HDFC Bank when there is a Zomato because how quickly the stocks have moved. And yes, HDFC Bank is certainly not at 1450, which is the cheaper valuations, but Bernstein finds value. The target price is 2100. So that's something to certainly keep an eye out for in this session today. Lastly, just watch out for HAL. It's out of the ban now, out of the FNO ban. And for the last 5 days, yesterday HAL was up. For the last 5 days, HAL has been consolidating. Can today's getting out of the ban trigger some bit of further buying in HAL? That remains to be seen. So let's wait and watch. So those are a few stocks from mine, Tamanna's, and of course we'll talk about a lot of stocks during the course of the show as well. But it's time for the editor's cut, and well, I was wondering, Alex, if we should bunk all that we are trying to talk about and instead talk about the fascinating India victory yesterday.
I was surprised, Niraj. I was watching you at the start because you were so passionate when you talked about those 4 maiden overs earlier in the competition, and you didn't mention Rohit Sharma's 90-plus score.
Blistering.
From 40 runs. He's a Mumbai boy at the end, from 40 balls. So, yeah, it was
But you're
exciting.
missing out the Afghanistan-Bangladesh match.
Yeah, it's going to be a crucial match.
Yeah.
For the first time, Australia will be praying that Bangladesh wins.
Can you imagine Australia being in that position?
So there you go. So it was sweet victory, and it was redemption, if you can call it that, for a few people. But let's see how that pans out over the. Remember, this is only the semi-finals that India is heading into.
Yeah, just one point here. A lot of people have mentioned yesterday this innings of Rohit Sharma was cathartic for him.
Yeah.
It may be. I think what will be truly cathartic for him would be winning the cup, because he single-handedly played those blistering innings in the World Cup in India, and we failed in the final. He would want to ensure it doesn't happen this time.
Let's jump straight into the top conversation today. And so this is on a group of stocks that were buzzing in trade yesterday. We're talking about holding companies. So if you own any of them, you were probably wondering why they were running up 8-9%. And Sajith might just have an answer to you. If you went out and bought, then he's got a cautionary statement for you as well. So Sajith, let's talk about why these stocks ran up in the first place. Do you have an answer?
Of course, there is some buying which is coming in because the underlying value of these holding companies gets created because of the kind of investment they have in the other listed companies. So many of the companies have investments, and those investments have moved over a period of time because the markets have moved up. And but these companies are still valued at a discount to the book value, and that's I think there could be some bargain buying, but at the same time, there is a fear that some of the retail investors who are not doing proper research may get stuck in some of the holding companies because many of them are very illiquid in nature in that sense, and that's the reason why SEBI came out with pre-auction. Pre-call auction for some of the holding companies, which would happen in
Was
the next
that the trigger for the buying?
It couldn't be a trigger for the buying, but yes, it opened up the eyes towards some of the holding companies which are at a steep discount.
Yeah.
Because if the stock is freely traded in the market, then you don't need a pre-call auction.
Sure.
But if it's very illiquid in nature, then you will require a pre-call auction.
How many holding companies are there, and how many qualify for a pre-call auction?
So so when SEBI did this exercise in April, it said there are around 70 companies which gets classified as holding and investment companies, and of that 28 companies are those companies where their investments or the underlying investments they have are listed shares, and that's 25% more than their book value is listed shares. Now, if you take it up to 50%, which holding companies have more than 50% of the book value as listed companies, then that comes around 25 odd, which is there. And that's very important to look at, because that gives you an idea where the issue is coming in from.
And how many of these companies would therefore qualify for the call auction, right?
That is true. So the guidelines which were set up says very clearly that if the book value of the company or of the current market price of the company is more than 50% discount to the book value of the company, and the book value of an investment company or a holding company has more than 50% invested in a listed company, then you are eligible for a call auction.
Got it.
Provided that there is no liquidity in the stock. If there is liquidity in the stock, the market is valuing it, so you don't have to do that.
And what does this call auction entail, Sajith?
It basically entails that at this whenever the call auction happens, there will be a notice of 7 days which will be provided by the stock exchange. The stock exchange will set out the kind of companies which will be classified under the call auction based on the book value, based on the discounts they are in, and then there need to be at least 5 buyers and sellers, unique buyers and sellers, to bid for those shares, means buy and sell the shares before a book value can be arrived at. If the book value is not arrived at, then it moves on to the next day and it continues till the time you have
And
that.
who participates in these auctions?
Anyone can participate. Anyone who has shares in the thing can participate, but it's not a typical buy and sell kind of thing. It need to have shares in your account. You need to have money in your account before you trade in a stock.
So the crux of it, a lot of people went out and bought, obviously, because the stocks ran up yesterday. Why should you be careful and mindful about what you are buying, Sajid?
It's a very simple thing. Holding companies by the nature have a steep discount to the underlying asset. In India, while in overseas markets it could be 30 to 40%, in India we have seen that typically it goes up above between 40 to 60% discount. Many of the holding companies are trading at primarily because the only source of revenue for them is the dividends which come from these companies. So they are not operational companies, they are investment companies, because they have to be they have been created for a purpose under the law for and anyone holding through a corporate structure gets classified as a holding company, in a holdco company, and in many cases the holdcos have been demerged in such a way that this holdco is separately listed and the operational company is separately listed there. But investors need to be very wary about which holdco they are investing in, what is the kind of assets they have in it.
Are they dividend paying or are they not?
Dividend paying or not is not the question here. Whether holdco will give them a dividend or not. It's that's a question that needs to be answered. Whether the holdco is involved actively in the growth of the operating company in some way. If that's not the case, then you get you buy into a share and then you're not able to exit.
Okay.
And that's something which we need to be very wary about before they invest in any holding company.
Niraj, any input here?
Yeah, just one quick thing. So the past history, and Chinmay yesterday gave a very good set of data points which we used on the closing show yesterday. But I don't know if we can pull it up right now. But a lot of these companies in the past have had a very sharp up move and then an equally sharp drop as well. So past history, if anything to go by, there's a flare that comes into these stocks a number of times and gets sold into. So be very careful with that. The only difference is that everything that Sajid has said is 100% correct. The small slight changes that can this price discovery mechanism work for some of the companies versus the rest. So yesterday Sajid pointed out this very interesting thing, that everything went up, everything didn't deserve to go up.
Yes.
A lot of stocks which are trading at a substantial discount and are illiquid may deserve to go up, right?
Yeah.
Not everything.
Yeah.
So that's the problem with the market, that it just takes everything up. Some of the stocks deservedly manage to go up, and which is why I think it's very important to look at which of the companies deserve to go up, which of the companies are at a substantial discount and are illiquid, and the point that Sajid made, that even if you get it at a value, at some point of time, you need to figure out fundamentally, can the dividend or something come from the holding company, or are you merely buying it for a pop that may or may not come.
And the question, bottom line is there's just 10 to 15 companies which fall under the illiquid category.
Yeah.
So you are basically, if you're going to invest in them, invest them with your eyes open and not just go invest because there is a steep discount.
Don't bet the barn on it.
Yes. And to sum up, if there's a weak wheat crop and there's a rise in the price of wheat, you still have to separate the wheat from the chaff. To move to the next conversation, which has to do with chemical counters. And Niraj, we've been speaking about when will the bottom come for quite a while. Has that bottom in the cycle actually come?
So price action indicates that maybe in some degree, yes, because if you look at, from a Navin Fluorine, they appoint a new MD maybe, but a Navin Fluorine, Deepak Nitrite, etc., all of them have inched up from the lows. So that's one price action. I'm going to make this quick though, Alex, for a shortage of time. But what's happening here? So global and domestic chemical companies' commentaries indicate that there is improving demand in certain discretionary end uses, but there is improving demands. That's the first one. Manufacturing PMI, and we've talked about this, it's been sketchy, but there is some bit of an uptick that is seen relative to what we've seen in 2023. Yeah. Now, if that happens, there is certainly an end-use demand for chemicals from across the world. I'm not saying, therefore, India will replace China, but there is demand per se. So, if there is demand, then the pricing may do better, right? And there is a recovery. The belief is that a recovery in spreads may aid EBITDA performance of some of these companies. Now, why is this important, Alex? Because of two things. One, if you just see, I'm going to change the order a bit of my editor's cut, but if you see that there is a benefits of a low base that some of these companies have, because EBITDA margins in FY24 were at multi-year lows. Sectoral PAT was at the lowest level. Return ratios are at decadal lows. If you take all of that into account, right, and the fact that there is a bit of a recovery, then you would believe that FY25, even on normal performance, if they do what they did in Q4, then the YOY performance will look good. So that is part one. Now, you will ask what they did in Q4 very quickly, or FY24. The operating cash flow was maintained at the highs that were last seen in FY20, which is great, right? You want businesses with cash flow. That's why TBO Tech went up yesterday. Cash flow to profits ratios are very good. One, there was a strong volume recovery seen in Q4 in companies like Vinity, Clean Science, Privi, Neogen, and some of the others. And Indian chemical exports, it's not a very large number, but they clocked the highest number in Q4 since May 2021. So exports have begun. We're talking about manufacturing PMI looking sketchy, but exports were there in Q4.
And inventory clearance also took place in a large extent.
Yes. So imagine what happens when inventory clearance happens and there is some bit of restocking that happens. There is demand that comes in from actual end use and from inventory stocking, both of which aid chemical companies operating leverage.
So, but then Q1, is this the operating quarter?
So interesting to see if that happens. You know, DSP-MF, for example, says that we might be at the close to the bottom, but whether it happens in 3 to 6 months or whether it happens later remains to be seen. I just thought we'd end this with the couple of notes that I've seen, right? So Nuama came out with a note on Spec Chem, and they said that the overall demand outlook for specialty chemicals has improved, and end user industries such as FMCG and autos are witnessing demand recovery and falling channel inventories. So their picks are clear. They are saying that players primarily catering to FMCG, which is Galaxy, Fine Organics, Rosari, Yasho, maybe a GFL, which is experiencing a recovery in demand, are the ones that they will bet on. So that is their pick list. And the Daulat Capital is saying that their preferred picks are Fine Organics, Sudarshan, Aarti, and Atul. For Atul, remember, just for people to know, they've got a large bit of their capex. In the last 3 years, Alex and Sajid, the capex that they've done is equal to their decadal capex. That capex has come on stream now. So for certain companies, capex coming on stream might actually also aid their performance.
When demand picks up and when volumes pick up.
Yeah, seemingly there is some bit of a pickup that is already seen. But of course, a lot to monitor as well. Sorry, just one last point. Chinese PMI activity, European demand, China dumping-led pricing pressure, all of that are key monitorables.
Absolutely. All right. So we have to also watch for Q1 earnings, which is not too far away. And certainly something to watch. All right. Viewers, let us know what you think about these two conversations, particularly the Holdco conversation, and whether you think that the specialty chemicals in the chemical space has finally seen a bottom and whether you're going to go out and buy. Do stay tuned. We've got F&O cues for you on the other side, so don't go anywhere.
back. You're watching India Market Open. Quick look at the implied Nifty before we move ahead. We're possibly seeing at least a positive start after the last couple of sessions. One stock which is definitely in focus is Happiest Minds. It's a block deal candidate. And what's interesting here is the promoter is offering as much as 6% of equity. Ashok Soota is offloading about 6% at a floor price of 826 rupees. Rucha is joining us with more details on what could be a very important stock movement this morning. Yes, Rucha.
Thanks, Tamanna. So, as you rightly mentioned, Ashok Soota, the promoter and executive chairman, has initiated a block deal to sell as much as 6% stake in the company. Now, the deal amounts to a total of 754 crore rupees, and the floor price is set at 826 rupees. Now, this represents a 10% discount to the last closing price. Additionally, Kotak Securities has been appointed as the sole broker for this transaction, and also there's a 6-month lockup for the residual stake held by Ashok Soota if he wants to sell further. So this is what we have on Happiest Minds Technologies today.
All right, thank you for that, Rucha. So that's the story with Happiest Minds, but Agam is also standing by to break down all the F&O cues for the day. Agam, are you seeing a more positive trend compared to what we saw yesterday at least?
Right. Well, so we continue to see a little bit of consolidation coming through, and I reckon that at the moment the Nifty is sticking around 23,500. And we've seen a lot of unwinding coming in as far as the futures is concerned, a decline of around 13% in open interest here. Even in terms of the bank Nifty, we continue to see a decline of around nearly 11% in open interest coming in. And, we haven't seen as much traction there, and even though we are near life highs when it comes to the Nifty, it does seem like at the moment we're stuck in a little bit of a range. We've seen very mixed cues when it comes to the option market. In terms of your overall open interest distribution, the only strike that stands out is the 24,000 strike, and the 24,000 call specifically is where we've seen the most amount of open interest distribution. But besides that, we have seen fairly evenly distributed open interest across the other strikes as well in terms of puts too. Moving on, if you consider the Fin Nifty, and which will look at our expiry today, where we're keeping an eye on 23,500 and thereabout. As you can see on your screen, there's a lot more traction with respect to calls as against puts, but of course a lot of that will change, considering today is the weekly options expiry. But in terms of stocks, again, a mixed day of trade. We did see Bosch, IndiaMart, Exide, Dixon Technologies, all of them looking at short covering. And of course, Glenmark Pharma looking at longs unwinding coming through. But let's take this forward with our guest for today. We have Amit Goel of Amit Ventures, who's joining us on the show. Amit, good morning. Thank you so much for joining in. What's on your radar today, and how are you reading markets?
Hi, good morning, Agam, and good morning to all your viewers. Thank you for having me again. The way I see the broad market indices, we've been, drifting on the upside, but a painful drift, if you ask me. Nifty has been trading in a broadish range of 450 points, with 23,200 being as a low of that range, and the new all-time high, which we had punched a couple of days back, 23,667. As a near-term resistance or a top. Yesterday's price action has been pretty bullish, if you were to ask me. And if somebody wants to take a bullish bet on the Nifty, one could look at initiating a bullish spread, keeping yesterday's low, which is 23,350, as a near-term or a technical stop for that. Right. Though I do not see a lot of breakaway action happening in the market, because on account of absence of any major cues. I believe near to the budget, we should be able to see some bit of action building up.
Amit, so you have about two different option structures based on certain conditions. Firstly, if you could tell us what the conditions are and under which, how would you deploy each of them? If you could tell us that.
Sure, Agam. So I'm suggesting that traders can consider Bank Nifty trades in the following manner. One is if we see Bank Nifty, following through yesterday's bullish close, and trading above the 52,000 mark for at least an hour or so, giving some bit of comfort that okay, we are in a fresh leg of rally, one could initiate a bull call spread for the next week's expiry, which is the 3rd of July, in which we can look at buying the 52,000 call at that point in time and sell a lot of 52,500 call for the 3rd of July expiry. The profit target would be in this trade about 3,000 rupees, and we will keep a rupee stop loss of about 1,500 rupees. Margin in this kind of a trade is about 20,000 rupees, and this is a limited risk, limited reward strategy. This is only on a condition that Bank Nifty trades above 52,000 levels during the day for at least a couple of hours or so, which basically gives us some bit of confidence that yes, the market wants to open a fresh leg of rally. I do also have another trade if that does not happen. So if you allow me, we can discuss that.
Yes. So Amit, please go on. What is the other structure that you're deploying here?
Since we are at a very crucial juncture, like we discussed the last time I had come on board, suppose Bank Nifty does not break the 52,000 level. As a trader, I do not need to be set whether I want to be bullish or bearish. So what we could do here is, if Bank Nifty sees some bit of rejection, some bit of resistance building up at 52,000 levels, one could initiate a simple put ratio spread for tomorrow's expiry. This is a very quick trade. Here what we could do is we could buy one lot of 52,000 put for tomorrow's expiry, that is the 26th June expiry, and we sell two lots of 51,500 put. Now in this, the upside risk gets capped at about 550 or 600 rupees because this being a ratio spread. But again, because it is a ratio spread, the downside risk beyond 51,000 opens to an unlimited risk sort of a scenario. So the way we would like to play this is, we aim for a target of about 1,500 rupees per lot, and there will be a special exit clause here. Suppose 51,500 is hit anytime during today or tomorrow's trading session, we will exit whether in profit or loss. Of course, if we enter this trade, we would not be exiting in a loss at 51,500, but that becomes a line in the sand that if it crosses below 51,500, which is our lower sold strike, I do not want to risk opening to the downside risk here. So this is if there is a resistance being faced in the market. So we're playing both the sides here.
Okay, well, so this is a relatively newer structure that we are talking about, and that's the ratio spread. As Amit has mentioned, what he's looking to do is looking to buy the 52,000 put, and against that, he's also looking to sell two 51,500 puts, and both these are of June expiry. That means that he's playing for the expiry coming in through tomorrow. Of course, he's also mentioned the conditions under which you can look to exit this trade. Of course, 51,500 being the key level here. So that's as far as, the other way to play the Bank Nifty is concerned, should you fill in on the second condition that Amit has mentioned. Amit, on that note, going to take a moment to thank you for joining us and taking us through your views, as well as, of course, providing us these strategies going forward. With that, it's back to you, Tamanna.
All right, thank you for that, Agam. Let's take a quick view now from Rajat Bose, who's joining us on the show. Sunny Agarwal is also with us. He's head of Fundamental Equity Research, SBI Cap Securities. Very good morning to both of you. Rajat, let me begin with your take. We saw smart recovery, actually, from the lowest levels on the Nifty and on the Bank Nifty yesterday. They've closed flat. But definitely, we saw some inherent strength coming in there. Do you see a build-up on that today on both indices?
Well, there is a possibility that the Nifty might start going up again, but it needs to take out 23,667, 23,671. 23,671 is the Fibonacci level, and 23,667 is the all-time high so far recorded. Once that is taken out, then it needs to stay above the 23,700 mark. If it manages to do so, then you will see 24,000 mark will also be conquered. But between 24,100 and 24,150, there would be a lot of resistance, because that's another very key Fibonacci level. So that being that, definitely it looks quite positive now. One can see the index going up, but only thing that I'm a bit worried is the rise is in a number of cases had been parabolic, and there are already corrections in some stocks where those parabolic rise is tempered by sharp fall. So that kind of a thing, we should all be prepared. It can happen to even the Nifty or the Bank Nifty. Coming to the Bank Nifty, 52,000 looks like highly possible. I'm looking at a level of 52,125. If it manages to get past the 52,000 mark, that possibility is very much there, so long as 51,000 is not taken out on the downside.
All right. So those are the levels we need to look out for today. Rajat, let's start with your top stocks today.
Well, I have chosen 3 stocks. All 3 are long calls, buy calls. There is no categorization. I would talk about them in an alphabetical manner. Bandhan Bank. Bandhan Bank looks pretty good. I would say 197.80 should be the stop loss on closing price basis. Targets 216, 222, and 231. Regarding Bandhan Bank, what I would say is that the technical rationale that I have in case of Bandhan Bank, it looks that there is a saucer formation in progress, and all the moving averages have turned up, be it 9-day, 20-day, and 50-day, and the 200-day exponential moving average, which has been tested in the last 3 sessions, that is around 207, and that is flattening out. So there is every possibility that Bandhan Bank can go further up. I've given a final target of about 232, but over the medium term, this saucer completion, if it happens, Bandhan Bank can go up to 250 and 260. The second stock is Infosys Technologies. Infosys Technologies, to my mind, is a similar kind of situation out there, that it has actually completed its the supply around, say, sub 1500 levels, and now it is headed for higher levels. I would put a stop loss at 1497, 1553, 1577, and 1613 are the targets. Infosys, even if it were to go down, if you buy, because the golden crossovers between, say, 20-day and 50-day moving averages are about to happen, and they have also turned up, just as in Bandhan Bank. So chances are you will see good rise in Infi. And now the third stock and the final stock is M&M. Last week, you prompted me M&M, Tamanna, but this time I have chosen it, and it has come down, and then the short-term correction is over. Yesterday, it signaled that it is now headed for higher levels once again. So I would suggest stop loss below 2869 on closing price basis. Targets are 2977, that is 2977, 3010, and 3080. It may appear that I'm quite bullish on M&M. Yes, M&M has absorbed supplies the way. So chances are, if the market momentum remains, M&M will meet all the 3 targets.
All right. So that's lovely, Rajat. Extensive list with a lot of detailing, and M&M definitely in focus. But another stock in focus, and I'm going to quickly take Sunny's view, Rajat also talked about it, is Bandhan Bank. So Sunny, good morning, welcome. Let's get straight to Bandhan Bank and how you think the street is going to respond to the fact that the RBI has had to get on an additional director, even when, leadership question is in flux.
Good morning, Tamanna. So I think right now we would like to maintain a neutral view on Bandhan Bank. The reason being that the kind of stress we are seeing in a microfinance book. So we have of late seen a downgrade of guidance by Ujjivan Small Finance Bank. At the same time, the farm loan waiver, which we have seen in the Telangana belt, it is expected that that can further lead to the same kind of populist measure by other states also. So Bandhan Bank again predominantly with a focus on smaller ticket loan size. I think we would like at the current juncture would like to maintain a neutral view. Would like to hear from the management. Can the recent trend of populism hurt the Bandhan Bank asset quality? And hence, as of now, we are not recommending our clients to buy a Bandhan Bank.
Okay. Talking about Bandhan Bank, it's in the midst of a leadership transition and an important development for banks usually, but RBI has taken action last evening. What is that action? Why is it important? Harsh is joining us with more perspective on that. Yes, Harsh.
Well, so Tamanna, of course, 9 July being the last date for CS Ghosh, or the date on which CS Ghosh is set to retire. Long-term MD, CEO, founder, Bandhan Bank. So it's a very big development which is playing out. And as of now, a successor not yet been announced, identified. So that's one concern. RBI, of course, appoints directors on boards of banks generally when there are operational issues. Need to wait and watch as to what the rationale behind this is, but generally it's operationally driven. It's happened in the past to RBL, where 2021 December, in the midst of a leadership transition, they appointed an additional director. The additional director, if that precedent is anything to go by, stayed on the bank's board for 2 years post that. So December 23 is when the additional director, stepped down from his role. And therefore kind of gives a lens as to likely how long this additional director will stay on, reasoning being operational issues generally. Other banks, other cases, there was a Yes Bank, there was also a Dhanlakshmi Bank. So generally banks which are facing some bit of pressure, both from a regulatory standpoint as well as from an asset quality standpoint, generally see some of this. Now, the other piece that may be material here in terms of concerns, there's a forensic audit happening on 23,000 crore of Bandhan Bank's book. This is, of course, their loan book, which is under the government guarantee loan portfolio, which is being audited. Of course, details of that still awaited, but that's one other area of concern. So plenty to actually speak about when Bandhan Bank is concerned.
Okay. Harsh, just very quickly, just to understand, could this be construed positively that there is a RBI director at some point of time? The rumors are that a very senior person from the industry might come in and replace Mr. Ghosh. So could this actually be construed positively, or do you reckon that the street might take whatever is happening currently in Bandhan negatively?
Likely negative, Niraj,
okay.
Because it doesn't give any comfort to the street that even if someone senior were to come in, why the appointment of an additional director, right? So likely negative, Niraj, long answer short.
Yep, long answer short. That's great. Okay, so that's the first piece. Harsh, while you're with us, there is a Bernstein note on HDFC Bank. Tell us, why is it that Bernstein likes HDFC Bank so much?
Well, 2100 rupees being the target price, it's a very solid 26% upside from here. What Bernstein seems to be suggesting is all of this merger overhang will slowly start to fade. 3 reasons key that they give with regard to the re-rating, and primarily being the ROAs will improve from the 1.8 kind of percent kind of number to 2.1% is what they're really alluding to. 3 key reasons why. One, they're suggesting that the higher yielding loan book will be a primary focus for HDFC Bank, and therefore your yields on the book will go up by 30 to 40 bips. It's a large book now. It's almost 25 lakh crore. So that kind of a margin improvement on that size of a book is surely something big that you would have to watch out for. The other piece they're talking about is cost of funds, and therefore alluding to the kind of NIM accretion which will happen over the next 4 years. HDFC Bank had sub 10% of borrowing when it was an unmerged or pre-merger. Now currently it has 22% of its book being borrowing. That they believe will come down to 13% over the next 3 to 4 years, which will therefore just shift all of the borrowings to deposits, which is lower cost, and therefore your cost of funds will start to come off. The third reason they're giving is with regard to OPEX to assets. They believe that OPEX, which has been elevated because HDFC Bank is expanding strongly, will start to come off, and some of those synergies will start to play out, as well as operationally they'll start to do much better, which will start reflecting on profitability. So those are the three key factors that they're looking at, and it's an interesting note and quite a detailed one.
Oh, certainly. Okay. Thanks a lot for that, Harsh. So certainly watch out for HDFC Bank as well as Bandhan Bank today. Sunny, if Bandhan starts off lower and likely today, would you use that as an opportunity, or you want to stay away from this one?
Hi Niraj, good morning. I think I would like to stay away from the Bandhan time being. Lot of structural changes we are seeing in both in the terms of industry also, as I was discussing. The recent farm loan waiver by Telangana may have some rub-off effect on the banks catering to smaller ticket loan size, especially to the individual entrepreneurs or agriculture belt. So I think, and at the same time, this appointment of additional director, I think there are many better opportunities available in the market. Right now, you guys were discussing on HDFC Bank. I think a very favorable risk-reward ratio. Similarly, ICICI Bank, Axis Bank. So there are many better private banks where risk-reward is favorable. And looking at a historical episode of Yes Bank, I think it's better to stay away from the bank which is going under transition regulatory challenges, and stick to a better quality banks where at least there is some visibility of earning growth over the next 4 to 8 quarters.
Okay, so Bandhan not looking hot right now for a variety of reasons. We'll take a quick break, ask about HDFC Bank and that Bernstein note when we come back. But remember, we're just a few minutes away from the pre-open. We'll be right in time back for that, so stay tuned. Welcome back. We're just about a minute away from the pre-open rates, and you're looking like you're set for a positive open as per the implied open at least. What's going to be in focus? Banks are going to be in focus for both positive and negative reasons. We talked about more of the agri-facing banks, which will see some pain today, microfinance institutes as well. But let's talk about HDFC Bank very quickly. Rajat, let me come to you on that. My colleague Harsh spoke about the Bernstein outlook, which is positive. How do you see HDFC on the charts?
Yeah, as far as HDFC Bank is concerned, it looks bullish. And I would say that since it has managed to keep its return on assets above 1.75, which I consider for a bank as a Lakshman Rekha, I think the naysayers may not be able to halt its rise. And on the upside, if it crosses 1700, the next target will be 1720 to about 1725, and after that, it will be 1759. But 1720, crossing 1720 will be an uphill task. Let's see how does it pan out. But for now, it is also looking pretty bullish because it has not violated its 9-day exponential moving average, which is currently around, say, 1629. Unless it goes below that, there will be problems.
Okay, that's a call on HDFC Bank. Sunny, very quickly, your view on an HDFC Bank. I know you're not too excited about Bandhan, but what about HDFC? You're on mute, I think, Sunny.
Yeah, we continue to remain constructive on HDFC Bank, and but one thing is pretty sure that one need to have a slightly longer investment horizon here. So I feel that maybe a quarter or two, over the quarter or two, we will see an improvement in the profitability as the synergies of merger start to play out. So maybe if somebody is a long-term investor, at least having a horizon of 12 to 18 months, can definitely look at HDFC Bank as a core portfolio addition.
Okay. Now, we'll wait, of course, for the first 8 minutes to go by, but we'll watch out for Happiest Minds, All Cargo, and Borosil Limited. 3, where there's a QIP or a block deal, either fashion. And it'll be interesting to see if All Cargo in particular, or even Happiest Minds, start off lower and stay lower. Now, Sunny, fundamentally, do you have coverage on, I'm using 2 stocks which are completely different. And then I would want Rajat's view out there too. But first, Sunny, to you. All Cargo Gati or Happiest Minds?
So Niraj, I would like to go ahead with the Happiest Mind. The reason being that despite of pricey valuation, the company continued to grow north of 30%. And the way they have, way they are focused on the new age technologies, I think the runway is pretty long for Happiest Mind in terms of growth. Although trading at a relatively expensive valuation, at the same time, I feel that IT as a sector may see some turnaround, maybe a quarter or two down the line. So Happiest Mind is something where I find the risk reward favorable and would like to be a part of my mid-cap portfolio.
Okay. Rajat, my first question to you this morning, good morning, but you know, a Happiest Minds, which might start off lower today, or an All Cargo, 2 different stocks from completely different sectors, but both of them might have a bit of a lower start today. Have you looked at the charts of either of them?
Niraj, one thing I must tell you that All Cargo, I really don't know. I mean, there might have been some fundamental development on the basis of which it might go up. But as far as the All Cargo chart is concerned, it's red all over the place, and the volume had been increasing. So maybe it has reached a inverse crescendo on the downside, and after that there will be a bump up. But unless it crosses, say, 66 to about 67, this 68, this range is very critical for All Cargo. If it manages to get past that, then definitely it will be, most likely it will be out of the woods. Regarding Happiest Minds, I would say that Happiest Minds for the last couple of sessions, it was moving up, and yet it came down pretty fast during the day and closed at the lower levels. Even that was day before yesterday, and yesterday also it closed in the middle of its total day's range. So technically it is not bullish, but if there is some fundamental development, some news item that comes in, then it can go up. But so long as it doesn't cross 955 to 960, fresh bullishness, at least from a technical point of view, would not be seen.
So a few of the movers in very early morning or the pre-open session, once again, Bombay Burma is up. Keen to know, both your views on these holding companies and whether there's any sense in what's happening. Kalpataru projects, they have orders worth about or new deals worth about 2,300 odd crores. Amara Raja, we spoke about tie-up with China's Goshen to make lithium batteries in India. So some of these are moving. Sunny, any of these that you track or you like? Amara Raja, any specific view?
Yeah, so definitely Amara Raja is a positive development, and the kind of news flow which we are seeing in the entire battery space, whether it is for Exide, Amara Raja, I think seems good days are ahead for both these players, especially on both OEM as well as both auto as well as non-auto segment. So I think we continue to remain constructive on the entire battery space, and we like both the players, Exide and Amara Raja.
3% higher for Amara on open, Tamanna. Interesting that the market is rewarding a stock which has had a really good rally thus far, but clearly they're moving into something that they were absent from is rewarding the stock. So good going there.
Absolutely. I think the earlier reward was for just being themselves, which was a company based in Telangana after the election results. Now it's for actually doing something. So something like that is happening with Zomato as well, to be honest. The initial reward for Zomato from the street perhaps came for just existing as a player in this new space. So profitability, etc., didn't matter. They're moving towards that, and that's perhaps why brokerages are so excited. Mahima, with that brokerage roundup, and I think one stock definitely in focus of all of these research houses this morning is Zomato.
Absolutely, Tamanna. So just to give a context, Process, which holds around 32.7% in Swiggy, came out with a lot of data points on Swiggy for calendar year 2023 on its operating performance, which is why brokerages believe that Zomato has an edge over Swiggy. Well, CLSA has maintained buy with a target price of 248, which suggests an upside of 28%. The overall Swiggy gross order value grew by 26% versus that of 36% for Zomato. And however, Swiggy's trading losses have reduced to $158 million, and Zomato reported a positive EBITDA of $5 million. Now, in terms of MK has maintained a buy with a target price of 230 with an upside of 16%. It's saying that Swiggy's IPO is now a key milestone, with valuation being the main monitorable, and Zomato's higher growth has been aided by superior performance in the quick commerce, which is Blinkit segment. Then we also had a Goldman Sachs note on Zomato, which maintains buy with a target price of 240 with an upside of 21%. What they're saying is that Process's Swiggy disclosure suggests further share gains for Zomato. They're saying that Zomato's market share are now at 56 to 57%, which is a 200 basis points expansion versus the previous period. And quick commerce Zomato scale is likely to be 50% larger than its nearest competitors. Lastly, there is Kotak Institution on Zomato, which maintains buy with a target price of 225, which suggests an upside of 13.6%. Swiggy's overall gross market value growth came in around 26% YOY compared to 32% for Zomato. What they're saying is that Swiggy's Q-commerce was much ahead of growth in e-commerce. However, Blinkit had more dark stores than Swiggy as compared to the calendar year 2023. So all of these notes combined suggest that Zomato's outperformance is set for the near future as compared to Swiggy.
Well, 201 though, it's not really having a rah-rah move this morning, Zomato. For one in the morning, maybe people have thought that this one could do well, but doing well, about 1.4% higher, nothing dramatic. Now, Rajat, this one saw a level last month of close to 175, has bounced back again at 205, or it could be new highs too. You reckon it has got the momentum to take out new highs and move higher, Zomato?
First, a caveat. I personally hold some shares of Zomato at far lower levels, and I continue to remain as an investor. Zomato, if it crosses 207, 207.5, that is the all-time high, I think. If that is taken out, then the next target would be 224. And once 224 is taken out, then you can expect much more acceleration, because a stock needs to clear a particular level, and beyond that, then fresh demand comes in, because a lot of people then takes interest in it. and that bottom has been created, so it's a fresh upswing. I'm pretty positive about that, but take my view with a pinch of salt because I have a vested interest in it.
Yeah, but well, the charts also say what they say. So, but good going, Rajat. Thanks for that. Thanks for pointing that out. You know, the other stock, by the way, at the end of 8 minutes, Amara Raja is showing as being the best stock on the BSE 500. On the other end is Happiest Minds, which is the worst performing stock at the end of the first 8 minutes on the BSE 500. So keep both of those in focus per se. Sunny, a mid cap idea that you might have recommended recently in the last few days, something that you've told your clients to buy.
So Niraj, you have recommended Garware High Tech Film Limited, current market price close to 2,200 rupees, market cap of 5,000 crore. So we have seen top line during the FY24 of 1,600 crore, 200 crore bottom line trading at. So basically, what is happening is that they are into the business of paint protection film and consumer shrink film. So paint protection film is a business which is driving the growth, and company has recently announced to double the capacity, wherein the benefit will be seen during FY26. So we are expecting the current top line of 1,600 crore to go to close to 2,500 crore in next 2 years. And again, it's a proxy play on basically automobile sector. So one has to keep in mind that as of now, 80% of the business comes from export. So now they are focusing on the domestic market and setting up Garware studios so that somebody can take his or her vehicle and get the paint protection film applied on their vehicle. So I think gradually it has already moved from a commodity business where earlier the margins were in the range of single digit. Now we are seeing a double digit margin. And as it start expansion of the studios, what I feel is that state will start assigning retail multiple to this business. So we continue to remain bullish on Garware High Tech Film with an price target of rupees 3,000 and investment horizon of 12 to 18 months.
All right, so that's one watch. Just wanted to get a quick call on all of the telecom players. Look at Vodafone Idea, look at Bharti Airtel this morning, look at Reliance as well, because spectrum auctions are up, and all of them doing fairly well. Just Rajat, your take first, especially on Vodafone Idea and Indus, which is one telecom stock which perhaps has only one way to go and which is up.
Regarding Vodafone Idea, it looks pretty bullish. In fact, it is completing a saucer pattern. Saucer patterns are very reliable bottoming formation, and that saucer pattern has actually happened above its 200-day exponential moving average. So chances are the intermediate high posted long back last year, February, that was say 1840. Once 1840 is taken out, its next target would be 21 and 23. But crossing 23, it would be a tall order. But for now, it's definitely bullish because it has not even tasted its 9-day exponential moving average since 5th of June. So that means it is showing a lot of traction on the upside.
Okay, so that's the take on Vodafone. Sunny, what about you? How are you feeling about the telecom players?
So Tamanna, I would like to go long on Indus Tower. The reason being that the large block is behind us, and post that I think the company has got a very good prospect trading at a reasonable 12-time price to earning multiple. And the way 5G infrastructure is being set up today, again there is an option for the spectrum. I think Indus Tower is well placed to report a very healthy earning growth over the next 2 to 3 years. So I think Indus Tower will be my pick for a medium to long term.
Okay, Indus Tower. Actually, it's something that I'll ask Rajat Bose post-market open, because Sunny is absolutely right. The biggest hurdle to Indus Tower was this large block coming. It's out of the way. And with Vodafone Health improving, the proceeds to Indus Tower could also improve materially. So fundamentally, it's very well poised. The point is, from a trade perspective, is there a near-term momentum to it or no? I think we'll ask Rajat Bose about this specifically as well. But we have about 15 seconds left for the markets to kickstart trade. Suffice to say that we'll start off marginally positive with a few newsmakers taking the cake in the morning. None so in the large cap space. Tamanna will highlight some of them on the open. But here's how the large caps and the benchmarks are opening. About 50 odd points in the green, so about 0.2% for the Nifty. The bank Nifty, which was mirroring the index yesterday, Nifty yesterday, up about a couple of percentage points as well, or rather 0.2 percentage points as well. Mid caps 0.5%, small caps, which were underperforming yesterday, start off really well. So this is actually a good start for the broader end of the spectrum. Pull up the heat map and show you what's happening on the Nifty per se. A lot of green, as you can see, little red. Tech Mahindra, probably Kotak Bank, but not too much. It's a day which is of quiet gains on the index movers because the index is also flat. Larsen & Toubro 0.7, Divi's 0.7, Coal India, Cipla, Power Grid, SBI. Nothing noteworthy. Reliance and HDFC Bank in the green. SBI is in the green. So banks seem to be doing okay for themselves, but no big winners, no big losers. The action fully at the small cap and the mid cap end of the market. Tamanna, over to you.
Yeah, absolutely. Lots of winners, big winners and big losers in the broader markets this morning, I would reckon. Let's pull up the indices first for a second and just tell you what's happening there. So about 0.5% up on the mid cap, 150. Nothing too dramatic, but definitely positive. Small cap even doing better. What's working today? Amara Raja. Let's start with Amara Raja. We talked about this in our trade setup this morning. They have an agreement with China-based Goshen Technologies. They're going to be making lithium-ion batteries in India. 12% up on that stock. Fantastic opening, even better than the pre-open session. Amara Raja, one to watch out for today. Kalpataru Projects is the other one. So they have joint ventures and international subsidiaries have both secured new orders worth 2,333 crores. So that order win fueling Kalpataru Projects this morning. Zomato, we talked about a whole host of notes from CLSA to Goldman Sachs. Everyone very bullish on Zomato, and the reason is interesting because Prosus put out its annual report in which it gave disclosures about its biggest investment in Swiggy. By connection, the market is looking at what can happen with Zomato and finding it very, very positive when compared to its biggest competitor. So that's why you're seeing Zomato up this morning. Happiest Minds is basically a block deal. So a couple of them, there's Borosil, etc. But Happiest Minds also looking like it's been hit for a couple of reasons. Ashok Soota has offloaded about 6% equity and at a discounted price. So that discounted price now reflecting in morning trade at about 8.5% down. Bandhan Bank is the other one which is feeling the pain. This was expected, in fact, lesser than what was expected earlier. So about 3% down on Bandhan Bank. I won't say under RBI's radar, but they have added an additional director to the board. That's usually when RBI wants to know what's happening in a bank which operationally is seeing a lot of flux since there's a new leadership expected. Vodafone and Indus Towers is the other one that you should mark out and look at and is moving in the first flush of trade. Spectrum auction could be one reason. So Vodafone in news 1% up, and I don't know if you can quickly see what's happening with Indus Towers, also 1% up. Those two go hand in hand. So those are some of the stocks that are definitely moving. But yes, all the action stock specific more than anything. I don't know, I'm wondering if holding companies are still showing that kind of enthusiasm and what's happening with the Bombay, Burma, etc.
So Bombay Burma is down today, but interesting you bring that point up. So before actually marking some of the other stocks, let's pull up those holding company stocks, some of them, and see what they're doing. Bombay Burma is down today. There is Bajaj Holdings. There is, EID Parry is a separate case in point, but Vardhaman Holding up 3% though. Bajaj Holding flattish. So yesterday's fanfare has quieted down at the very least. You can admit that. But let's wait and watch. It's early days as yet. Maybe some of them perk up during the course of the day. Capri Global is up 7%. Watch out for that one. Just a couple of others. Craftsman has done this acquisition, if I'm not wrong. 440 crores, I believe, is what they have acquired, a company. That Craftsman Auto is up about 3% as well. So watch out for that one too. And yesterday's big winner, Route Mobile, is down 3% today. Aster DM is down 2.5% today. So those are amongst the top 5 losers as well. So these are a few that you may want to watch out for. But no taking away from Amara Raja, 11.5% higher. Sunny, my question to you is that if you had logged into Amara Raja a year ago, when this whole fanfare around batteries started, at this point of time, would you book some profits or would you stay invested?
So I think if somebody has invested a year back, I think a partial profit booking makes sense because we have already seen a first leg of re-rating on expectation that battery business will do well over the next 3 to 5 years. So yes, if somebody is an early beneficiary, definitely some profit booking is advisable. But still, I mean, if somebody has got still a long-term view, I think there is still scope of significant upside in terms of earning and hence the stock price also. So early movers can definitely look at booking partial profit. And if somebody want to deploy a fresh capital, maybe buy on DB the right strategy at a current juncture.
Okay. The loser, of course, is Happiest Minds, 845, 8% lower, and this was anticipated. It's a large block coming in an IT company at a point of time when IT companies are not necessarily having the best of demands per se, which is why, and the promoter selling. So all of that leading to Happiest Minds certainly having a big crackdown in the session today. Rajat, actually, Tamanna makes that interesting point, right? The holding company stocks, there are a clutch of them out there. My question to you is, you may have looked at some of them. If not, I will read out some of the names, of course. Maharashtra Scooters, Kalyani Investment, Bombay Burma, Vardhman Holdings, Ramco Cements, JSW Holdings, Maharashtra Scooters. Any of these stocks, if you've looked at them, what do the charts indicate?
Yeah, I was looking at Ramco Cement because it looks pretty positive in the sense that 20-day, 50-day moving average golden crossover is happening today. And it shot up in the recent past from lows around, say, 700. And then it moved up quite strongly. And now it was consolidating around the 200-day exponential moving average, which is currently located around, say, 857 or so. It is possible that it can move up from here. And if one is getting into this, one needs to put a stop loss below 815 on closing price basis. The basis of my stop loss is that is the golden cross level of the two moving averages. So it is unlikely to go below that. On the other hand, the projection comes to about 960. If it were start moving up above 900, then 960 would be the target.
All right, so that's the story with Ramco Cement, but what an interesting morning it's turning out to be. Another sector which is again facing the brunt is fertilizer stocks. Just a quick look at what's happening to that entire list. Chambal, Deepak, etc. Actually RCF is recovering over there. Chambal and Deepak are down, but RCF is recovering over there to some extent. Are you seeing any sort of longer term play, Sunny, considering that ahead of the budget you're going to see more moves towards buffering farmer incomes? And if I look at the flip side of possible farm loan waiver increases, etc., is that a boost for fertilizer stocks and agri-consumption stocks?
So on fertilizer stock, I think we continue to remain restricted to few players like Coromandel International, which is the largest player managed by the Murugappa Group. And that gives us a lot of comfort, at least in terms of earning consistency. And a few more players which we like are basically Dhanuka, Agritech, again, a very niche player in herbicide, pesticide. So there are few, not a very favorite sector to ride on, but again, a few players which we like are Coromandel, Dhanuka, and Rallis India, which belong to the Tata Group.
In fact, we're going to be speaking with Coromandel in just a bit from now. So a quick, programming reminder there. But Sunny, thank you so much for joining us today. We're just going to bring in Puneet, my colleague, to talk about what is undoubtedly the stock of the morning, Amara Raja. So now, Puneet, some things that we know, there's a tie-up with China-based Gotion. They're going to make lithium batteries. But why the excitement? Why is this a big deal?
So one of the key reasons why this is a big deal is because, the management has been talking about doing a technical tie-up over the last, couple of conference calls as well. And the reason is that, this will provide Amara Raja with the know-how and the technology for manufacturing lithium-ion batteries going forward. Now, this is part of a larger plan of roughly 9,500 crores that the company is investing in building a plant in Telangana, which is expected to commercialize by 2026 by roughly the Q3 or the Q4 mark. The first phase of this will probably come in the next year itself, so there's nothing that is going to come in this year. And this is also significant because Exide is already, it plans to commercialize the first phase of its technical tie-up with other companies that it's having, along with, in this particular year itself in Q4. Now, the other reason why this is significant is because it provides access to cell technology, intellectual property to Amara Raja from Gotion. They've also said that this will support the gigafactory that it is building in Telangana, which I highlighted. Also, one of the key reasons is that the global supply chain of Gotion, because it's a China-based company, is very deep. So this will also give the Amara Raja the raw material, which has been one of the key problems for for a lot of players in sourcing the raw material for the lithium-ion batteries going forward as well as providing Amara Raja to operationalize the manufacturing facility sooner. Probably by the first half of FY26, we'll await more details on that. Now, the one other thing is that, Gotion also has a joint venture with Innobat, and both of these entities, both Gotion as well as Amara Raja, have an equity stake in this. So currently, equity stake of Amara Raja in this particular company of Innobat, which is one of the leading EV manufacturing, battery manufacturing players, is roughly around 9%. They invested roughly $30 million up until now. Now, management has been telling us that they want to do tech partnerships, not just for the next couple of years, but a longer term for the next 5 to 8 years. And this particular partnership will help them do that. Do note that Gotion has roughly 2.2% market share in global EV batteries going forward as well. Finally, Amara Raja, we spoke about the 9,500 crore investment. This will be over, of course, the next 10 years, and they will have a higher capacity of roughly 16 gigawatt compared to someone like an Exide. Now, they don't currently, the only challenge which could be here is on partnerships with, other OEM players. So Exide has already announced that with Hyundai, and the other players such as Tata, Mahindra, as well as Maruti have already had some partnerships which is already inched up. Mahindra is going out with Volkswagen, and Tata has announced with Agrata. So the key thing is they've got the cell manufacturing technology now. It's going to be important how they're cancelling it to orders.
Puneet, by the way, as you are speaking, Amara Raja is now up 19%. This is a breathtaking move. It's gotten excited as well. Just wondering, Puneet, very quickly, 30 seconds, does this make Indian battery manufacturers enter into a zone which hitherto they were absent, and therefore could valuations for both move up from where they have been?
Yeah, that's right, because we have seen that Exide has already run up a lot. It's currently trading at the 36 time price to earnings going forward, and Amara Raja is roughly at 22 times currently. So this could be the catch-up trade going forward as well, going forward. And for Exide, as I said, it has already announced a partnership with Hyundai, and it is expected to commercialize early on. So this might just be the pivot that Amara Raja needed to boost up, of course, the stock price, but also its business operation going forward, because the lead acid business is getting lower valuation from brokerages and analysts. So I think this could be the pivot which could probably, take it to the next level going forward.
All right, super. Very, very detailed report there from Puneet and on a very important stock this morning, Rajat Bose. But I'm going to come to you not on Amara Raja, unless you absolutely want to talk about it. I have to talk about the Bank Nifty, also hit an all-time high.
Can I please request you to first go to Rajat on the battery companies?
Okay. Or first, just on Niraj's special request. Thank you. Rajat, Amara Raja and Exide.
Should I talk about Amara Raja first?
Yes, I think we must.
I wish you did not ask me the question, because 37 March 18th this year, and now it is 120% up. In my first 30 years in the market, the 90s, the noughties, and the teens, we were told and we practiced that when a major news comes in, that is the time when a top happens and everything is discounted. But we are now in a market where money is flossing everywhere. So go on so long as the party continues. Because in my view, if I could show you the weekly chart, you would have seen the parabolic rise. The parabolic rise is a very dangerous thing. But if you are not greedy, then book some profits around these levels. I definitely do agree with Niraj that it opens for the battery manufacturers and new vistas and all. But look at the rise that has happened. All this has been there in the grapevine, and people have actually bought, and now they might be booking profits. So that is the risk of buying at these levels. I'm sorry, but I don't want to be a party pooper, but I can't resist telling this.
Rajat, we need the true story. We need the true story, and that's the point, to give the advice. Very quickly on Bank Nifty, which is also, I like that word, seeing a parabolic rise.
You see, parabolic rise are very dangerous things to happen, because that actually suggests a culmination. If you go back to 2000, you will see the tech stocks in parabolic motion. And recently, look at the chart of SRF once you get the chance. Even if it does not fall in a very big way, you will see that for the last 2 years, those who have bought SRF at 2800, they are still hoping that SRF will hit 2800. So that kind of a sideways movement happens after a parabolic rise. That's a good thing. And then there could be crashes. Coming back to Bank Nifty, I would say that it is definitely looking good. But one thing is there, that it needs to take out 52,170 to about 52,200, because that would be a Ganfan resistance. If that is taken out, then further upswing can happen in Bank Nifty.
Got it. Okay, Rajat, great having you today with all your wisdom and your experience. Thanks so much for taking the time out and being with us.
Most welcome.
It's fantastic to have Rajat Bose, and we need to slip into a break though, on the note that specific stocks are very, very active, and we'll talk about active pockets. On the other side of the break, we'll be joined by Ms. Jayashree Satyagopan. She's President, Corporate and CFO at Coromandel International. Lots happening with the company, including a nano fertilizer plant that has come on stream. We talked to them about what's next. All right, back with India Market Open, and in conversation with Coromandel International, they've commissioned, amongst other things, their nano fertilizer plant. But you know, lots happening out there within that space. And Ms. Jayashree Satyagopan, she's President, Corporate and CFO of the company, Johnson, right now to talk about what's happening within the bucket and with Coromandel itself. Ms. Satyagopan, good having you. Thanks so much for taking the time out. Good morning. This is Niraj here. How are you assessing what's happening currently within that landscape of agri/fertilizers? Because a lot of talk happening around the bucket, what the government could do as well, alleviate the agrarian stress, if you will. Just give us a broad brush view on how do you see the landscape.
Morning, Niraj. Thanks for having me in the morning show. The government has been pretty proactive when it comes to agriculture. and looking at farmers' welfare over the past few years. And we expect this new government that's recently formed will continue its reforms and pro-farmer, pro-agriculture related measures. What we see is more adoption of nutrients, which is where Coromandel has a role to play, which is more of NPK, and also looking into novel technologies like nanotechnologies. A year and a half back, we had nano urea that was introduced. Coromandel recently has commissioned a nano DAP plant and has also got 2 technology research centers which is focused on nano-related products. So I think organic fertilizers, novel fertilizers, like we've also very recently introduced a urea SSP, and fertilizers with micronutrients which are unique, which addresses the needs of the soil, and obviously nano-fertilizers. All of these are going to be helping the farmers and also enrich the soil in terms of looking at the necessary nutrients which will help in productivity.
So, Ms. Satyagopan, put this into perspective. I believe the latest nano fertilizer plant has come on stream as well. I mean, is this a big deal in terms of what it does for the business and for the numbers?
No, this is a relatively smaller size plant that we have. It has about 1 crore bottles of nano DAP that can be produced. These are modular plants. So depending on the demand, we can set up multiple plants in different locations. The first plant has been commissioned at Kakinada. And based on all the field trials that have been conducted so far with the help of our agronomist, we find that the product efficacy has been very good. And therefore, in a period of, say, about a year or so, if we want to replicate, set up newer plants, it can be done in a period of 6 to 8 months. So that's the beauty of these nano plants that we have set up.
Ms. Satyagopan, very good morning. Tamanna here, and great to speak with you. Just wanted your perspective on, I think, what is a key expectation from the industry. And the GST Council recently discussed it, has referred a rate rationalization for fertilizers to the GST, to the GOM, the Group of Ministers on Agri and Chemicals. How crucial is this? How crucial is this, and how does it impact, say, a company like yours?
See, currently the GST rates for fertilizers, Tamanna, is about, output rate is about 5%, which is on the lower end. There are a couple of inputs where we have about 18%, which is like ammonia or a sulfuric acid. And therefore, fertilizer companies who do the manufacture will have an inverted duty structure. Therefore, we all claim for GST refund, and the government and the GST authorities have been very proactive, processing the refund applications and giving us the GST refunds. Now, what we understand that the GST Council is considering is a reduction further in the output rates. So we just need to see what rates have been recommended, whether it is going to come down from a 5% to a 2, 3, or it's going to be nil. And therefore, the implications in terms of refund for the fertilizer companies from an inverted duty structure. That's something we'll have to wait and watch.
So in your particular case, what are the implications? And if the GST rate does come down, it most likely will be coming down to 0. But you still are paying a higher, GST rate for your input. So what are the implications for you?
So we will continue to claim the GST refunds so that there is no credit accumulation that happens in the balance sheet. But at the same time, when you look at it from a farmer perspective, what we would look at is about a 50 to 65 rupees of impact per bag when they are going to buy, for instance, a DAP 50 kg bag.
Okay.
So the farmers will get some benefit. From the corporate standpoint, we will continue to claim the GST refunds, and it comes with a 2 to 3 months lag in terms of refund processing by the GST authorities.
If it's a benefit of 56 to 60 rupee per bag for the farmer, what's the benefit for you if you possibly pay 0% GST?
No, there will not be any special benefits for corporates. Okay. As I was mentioning, there is an inverted duty structure.
Okay.
And the credit accumulation has to be claimed back as a refund from the GST authorities. So there is a cash flow implication which could take about 2 to 3 months. So it's a working capital impact.
Okay. I want to come to another point which I think is important for your company specifically is subsidies for fertilizers. And in the interim budget, as was expected, the subsidy for fertilizers was lower than what was penciled in. Do you expect that to be increased significantly in the July budget? What are you looking out for?
So typically the government announces subsidies a couple of times in a year. One is for the Kharif season, the other one is for the Rabi season. The subsidies for the Kharif season has already been announced and is being practiced the last 3 months, April, May, June. And we expect the next revision to happen in October, which could be for the next 6 months of the year. At this point in time, we're not very sure that there is going to be an increase in the subsidy rates when the July budget is being taken up by the government.
Yeah, I mean, we can't preempt it, but it is widely expected that there may be an increase in the subsidy rates. If there is, I'm trying to understand what is the impact for you on margins?
No, if the subsidy rates goes up, it's not just for Coromandel. I think it will augur very well for the fertilizer companies overall, especially in the case of DAP. The subsidy rates have been very subdued. So that will be a good relief for the companies.
Ms. Gopan, anything else that you would want to see, not necessarily as a part of the budget or otherwise, but as a move being done to fix, let's say, an anomaly to your mind within the pocket?
One thing which definitely we have been advocating and working closely with the government as well as through our influencing the farmers is to have balanced nutrition, because various parts of the country we see there is deficiency in terms of certain nutrients. Today urea is very heavily subsidized and therefore farmers tend to buy urea and use it more than required for their fields. So a bit of balanced nutrition uptake will actually help improve the soil richness as well as the productivity for the farmers. This is something that we would be very keen and eager to see if the government could take this up, because it will definitely help to improve the overall productivity from an agricultural standpoint.
Got it. Ms. Sadgopan, just now moving on from there to how is business, because when one looks at your Q4 as well for CPC, because of, there was a revenue decline, there was an EBIT decline, global pricing pressures, I believe, were there at that point of time? Have they existed, and therefore is the near term looking a bit skittish, or has there been a change out there?
The CPC business had multiple external headwinds. It's not just for our company, it has been across various companies in the country because of the situation that was faced in Brazil, very high level of inventory, and then there was a price which had come down dramatically because of China. These two situations seem to be coming slowly in control. As we understand, the stock in Brazil in the channel has come down. The China prices are still lower, but we expect it to stabilize at some point in time. And towards Q3 of this calendar year and Q4 of this calendar year, we expect much more normalcy to come in the crop protection business. Having said that, even last year, our CPC business grew in absolute volume terms. We clocked more than a 20% increase in volume terms, and we also grew in markets like Brazil, where most of the other companies had faced huge challenges. Our focus also has been on domestic formulation business, where we have a very large opportunity to grow. So these two areas are going to be very critical. And you would have also recently seen that the company has launched 10 new products in the crop protection side, out of which 4 of them are 9(3) products. One has a collaboration with a Japanese innovator, and we are also strengthening our portfolio on the herbicide front. Therefore, domestic formulation business, we believe, will clock a good growth, and also looking into niche markets in the export segment, where we have presence in more than 60 countries. We believe that crop protection business should grow well during the year.
All right, Ms. Sadagopan, we'll leave it at that. Thanks so much for taking the time out and being with us, and all the best for the quarter ahead.
Thank you.
That's Coromandel out there. We take a break. Up next, we'll be joined by Umesh Revankar, Executive Vice Chairman of Shriram Finance. Stay tuned.
And welcome. You're watching NDTV Profit, and I have the pleasure of welcoming on board Mr. Umesh Revankar of Shriram Finance. He's the Executive Vice Chairman at Shriram Finance. Welcome, sir. It's good chatting with you, and will be good to get some perspective.
Yeah, good morning.
Hi.
My pleasure.
Right. Sir, I want to try and focus in on your housing finance subsidiary first off, and the sale with regard to that. Around 4,000 crore going to be received. So talk to us about the rationale for the complete exit, because of course there were talks that there will be some bit of an exit, given that you were planning to raise funds there, but a complete exit was not on the card. So talk to us about the rationale behind that.
Yeah, basically, if you look at the housing finance business, normally finance lending is for long term, 15 years. And the AUM keeps growing very fast. So it needs capital at frequent interval. And Shriram Finance is also growing, and it also requires a capital. So we need to provide capital for housing finance subsidiary quite often. So we had an option of providing capital, or we had an option of selling it fully and keeping adequate capital for SFL growth. So we thought the second option is better because the capital consumption being high, and SFL also requires capital for its growth. So that's why the board took the decision of selling the housing.
Got your point, sir. And duly noted. I just want to try and zoom in a little bit on the valuation as well. It's a high growth company, Shriram Housing Finance. Could you give us some perspective with regard to how the valuation, what's the kind of valuation you've got, given that the growth is extremely high?
See, the valuation wise, we are quite happy with the exercise what we underwent, and there were multiple people, multiple companies or the entities who were interested, and it also requires a very specialized focus. So depending upon the interest of the buyer, and since the management team is continuing to remain, and that was the one big factor which we decided. So management team is also very happy with the transaction because they can be focused on running their business without much of multiple stakeholders. So that's the reason we felt that this transaction is to be done. And the valuation we got is quite good under the current circumstances, because whatever when we do, it depends upon what current circumstances holds for us. Depending upon that, we take a call.
Right. Sir, you've spoken about the need for capital for Shriram Finance. What does this do to your capital ratios, if I may? Because your capital ratio is above 20%, so you've got a very healthy capital adequacy in any case. This, of course, shores up your capital adequacy further. You've guided for an FY25 loan growth of 15% overall. So what kind of a runway does this provide in terms of funding for your capital? That's one. And second, does it impact your growth in any way? Because this is a 55% plus last 4-year CAGR book, your home loan book. And therefore, does it impact or tweak your growth number of 15% in any way?
No, what we're talking about is a standalone growth of 15%. It doesn't include housing finance portfolio. And as far as the tier 1 capital, we are at 19.4. We were at 19.4. Post this transaction completed, this transaction is likely to complete in this financial year. It may add to around 1% additional. It is not really going to add big, but 1 to 1.5% additional. That means it may go back to around 21% by the year end. For us, and that helps us to grow for another couple of years very comfortably. And therefore, we felt that since we need not raise capital again within next couple of years, this transaction should go through. And we may grow a little faster depending upon the economic activity. Ultimately, the country's economic activities are very important. At 7% GDP, we have estimated a growth of 15%. But if the country grows faster than the 7%, if it is 7.6 as some of the estimates says, or if it is 8, then we may grow much faster.
Very interesting. But what's the? I'm fully conscious that you will likely be silent with regard to Q1 because understandably so. But just what's the kind of tailwind you are seeing? Are you seeing the kind of growth that you saw in FY24 continue in FY25? Because you're talking from a perspective that you might grow faster. And therefore, just trying to understand which segments of yours are seeing better traction and where would you like to grow faster if the economy were to do well, which it seems to be doing quite well.
See, basically, if you look at the broad product range, what we have, it is basically the vehicle financing. It depends upon the infrastructure. If the government infrastructure spend is quite good in this budget, we are eagerly waiting for the budget, then definitely we expect much faster growth in vehicle machinery, construction equipment related growth. At the same time, the rural is holding good. That is a much better news for us. And this time, the monsoon is also expected to be above normal. This gives us a much bigger comfort on the growth in the rural market, especially in the agri, SME, and the other rural-related growth, like your two-wheeler and tractor, etc. So we feel overall that this year is going to be extremely good for us in the second half of the year because agri output is likely to be much higher in the rural market. Urban market will definitely depend upon the real estate and the infrastructure spend by the government.
Got your point, sir. And, sir, just with regard to the segments which you are now going to start focusing on, given that housing finance likely one segment where you don't have to now focus on, you'll start focusing on the others. So just want to understand which will be the focus areas for driving this growth higher more than 15%, what will be those sectors or segments you will focus on? You've spoken about agri. What about gold? What about MSME? What about personal? Could you talk to us about some of those?
Yeah, see, basically, when I say MSME, most of the MSME which we are focusing are in the semi-urban and rural area. They are indirectly or directly linked to the rural prospect. So mostly the shopkeepers, distributors, the small mills, small manufacturing units, all those things which are spread in the semi-urban rural area, which are likely to be the growth focus for us. And we are confident that we'll grow more than 20% because all these days, our focus was mostly in the south and some part of the west. And now we would be growing in the north and central part of it. So that gives us a huge scope and opportunity to grow in MSME. Plus, the gold is a natural growth for us. As we create more reach or more infrastructure in the branch, we will add more gold branches. This year, again, last year we added 500 branches for the gold lending. This year, again, we'll be adding another 500 for the gold lending. So that's how the gold will keep growing. And the other area which we will be focusing is passenger vehicle transportation. If you look at the way passenger vehicle demand is coming up, especially for public transportation, that's coming up quite fast in the semi-urban rural area because the state government undertaking spend has come down in the last 4 or 5 years. That puts pressure on the private sector to participate in the transportation activity. And we have been very comfortable in this sector. So passenger, MSME and gold are likely to grow more than 20% year on year in this financial year.